Hello, I'm Finola Burke from RaaS, and today our focus is on critical metals powder manufacturer, Amaero International, ASX ticker 3DA. Joining me to discuss the company's progress with its flagship Tennessee operation is Chairman and CEO Hank Holland. Welcome, Hank, and thank you for joining me.
Thank you, Finola.
Hank, you've just released an executive summary of the Fairmont Consulting report into the market for critical metals powder production and the opportunity for Amaero therein. In particular, on the niobium CO3 market, the market for that particular metal is small in terms of volume, but highly lucrative. How will Amaero measure up against competitors that may already be in that space and may already be producing CO3 powders? And what moat do you see yourself having against other players that may want to come into the market?
Yeah, it's a very insightful question. Let me provide context in a few different ways. One of the things that I tried to talk about in the investor briefing yesterday is, often as investors, we think about TAM, right? Total addressable market. Implicit in that, the larger TAM, the better, the bigger the opportunity, et cetera. And certainly there's a lot of very foundational, strong businesses built on large TAMs. With the idea with a large TAM, though, is it breeds competition. It attracts additional capital formation. And invariably, the differentiating characteristic becomes price, right? You, by nature, end up with commoditized products or commoditized service. And again, one differentiates themselves from price. The benefit of a specialty market or a niche market, and there's a lot of these that you can point to in industry, is by their nature, because the TAM is not as large, for large industrial companies, that TAM is not sufficient to justify investment. And thus, quite often, instead of build, they go into a buy mentality rather than build mentality. The best example I can think of this are large drug companies. And you saw this change come about in 2010 and after that. Today, you've got these large drug companies, most of which are European and American drug companies. And what they set out to do is they became larger and larger and had pipelines of drugs already on patent. Rather than invest to develop new drugs, many of which had lucrative markets but smaller TAMs, they took the approach, well, let some life science company develop that market, get through the FDA, get all the approvals that they need, establish their market position, and then we'll buy them. And that will be a more attractive way, kind of a buy strategy versus a build strategy. And that's but one example of specialty niche markets versus big TAM markets. To your question specifically, who are our competitors in the US and what is our differentiated position? In the US, if you look at powder generically speaking, and the numbers that we provided were North America in the presentation, the entire powder market, about 85% of that is commodity alloys. The largest one of which is stainless steel, about 60%. Then you've got nickels and so forth. But 85% of the market is very high volume, low price, lower margin commodity businesses. Then you've got 15% of the market, 10% is titanium, and 5% is specialty. That would include niobium C103 and a whole host of other specialty as well. In the case of refractory, there aren't many technologies capable of operating at a high melt temperature. And so the only technology that's really capable and proven is IGA technology. In the US, there's a world-class manufacturer by the name of ATI. It's the old Allegheny, you mentioned, a really good industrial company. They've got a US market cap of about $5 billion. Their primary market is wrought material. And what I mean by wrought as opposed to powder is, rolled titanium, plate, sheet, right? All type of wrought material. That is 97% plus or minus of the total revenue, right? So it is the core of their business is wrought. And the core of their client base are customers they provide wrought to, such as Boeing, right? So powder, back to this analogy of a drug company, think of it as a small drug. Think of it as a small TAM market versus what they're accustomed to on the wrought side. They have one IGA. It's the last generation IGA. So implicitly, their yield of powder bed fusion is lower than ours. 200 tons total production, I would guess. Maybe 25% powder bed fusion. So maybe 50 tons of total capacity. A significant amount of that capacity is allocated to titanium for some of those same customers they have on aerospace, such as Boeing, and their lead time for orders is 2 years. Great competitor. They will capture their fair share of the C103 market, but as you can see, they're constrained with how much they can provide to the market. Beyond that, the next, I would say, well-respected producer would be a producer I won't mention by name, but it's a Canadian producer owned by a well-respected US company. They use a plasma technology. The challenge with a plasma technology is the feedstock is wire. Implicit in pulling wire is you get a higher oxygen content. And also the nature of plasma and the way it melts, it's unclear of whether you will get sufficiently quality powder in the refractory out of that process, number one. Number two, they're not US. Even though they're US owned, they're Canadian, and that's not going to qualify for these purposes. The other technologies are either unproven technologies or they don't have lot traceability of their feedstock, either using scrap, and that's not going to work in these applications. So if you look at what we're left with, it is a very limited supply universe, and thus the chance Fairmont believes we have of capturing a large market share, far larger than you would expect in a more commodity-oriented market.
And on the other side, how difficult is it to secure C103 feedstock of the quality that you need for hypersonics and satellite parts? And do you anticipate any challenges in securing a long-term source, Hank?
Yeah, so here too, it's a great question, and I would point to a challenge and I would point to an opportunity. Unlike elements where we are at risk of geopolitical uncertainty in nations such as China and Russia in particular. So take titanium, on the order of 90% or some very, very high percent of Thai sponge capacity is in China, right? And so if you are reliant on buying Thai bar, there is a challenge over time to the extent China is cut off. In the case of C103, the elements we're not at risk of. So your largest element, almost 90%, is niobium. 95% of niobium in the world is mined in Brazil. Your next largest is hafnium, almost 10%. Most hafnium comes from North America. However, and this is an important however, in the US, we're very constrained today with melt and casting capacity. And so in the near term, we've already signed our initial feedstock agreement for 2.5 tons. We're in conversations right now with agreements for kind of calendar year 25, calendar year 26. We don't anticipate that we'll have challenges securing feedstock for refractory and C103. Longer term, though, there is interest in US government, Department of Defense, and other allies, if you will, or stakeholders, that we stand up proprietary melt casting capability. I think we would readily qualify for government funding for this, and it would vertically integrate our supply chain. And so I think it's an opportunity for us longer term. It's a challenge in the nearer term, one that I think we can navigate.
And Hank, the production schedule that is in the report sort of contemplates PBF power production of about 100 tonnes per year per Eiger. Do you think you'll be able to extract more from each Eiger over time? Perhaps you could talk about how that all operates.
Possibly, but not my assumption. So in fact, the trials that we ran in Germany while our Eiger was installed in Germany, we in fact had powder bed fusion that was north of 60%. However, whenever you run smaller lots, I think one should always have a little bit of skepticism of whether or not you can repeat that in a larger commercial scale environment. So is it possible? Yes. Do I think analysts such as yourself should assume that in a modeling purpose? Have we assumed that for internal planning? No. I think 50% positions us in a very, very competitive position. We certainly will continue to try to make advances and improve our yield, but it's not something that we're assuming in our own internal modeling.
And you recently engaged Guggenheim as strategic advisors to raise equity and debt capital. Are you in a position to provide an update on how those discussions are progressing?
All I would add, and this is really nothing more than what has been stated to date, I have a long-standing relationship with Guggenheim, as well as a number of other board members do. Guggenheim, as you may know, is one of the most respected mergers and acquisitions and capital market firms in the US. They have keen interest in additive manufacturing and advanced materials in general. So it's a big deal that they agreed to take on this assignment, and they've been a great partner. Part of what prompted this is we began to receive unsolicited inbound interest from strategics and financial sponsor investors. And thus we needed a way as a board to thoughtfully assess, if you will, and evaluate these in the context of capital raising needs that we'll have in the future, as well as other strategic imperatives. With that, we will go to market. We will have them specifically be the tip of the spear for strategic investors in the US and financial sponsors in the US. And what I mean by financial sponsors, think of private equity firms, think of other growth capital firms that I think we could be well aligned for as a shareholder. One of the most popular themes right now for private equity firms in the US is the defense sector. And it's popular because it isn't subject to the vagaries of economic cycles. And obviously we all have reticence about what's ahead for China, where they are in their economic cycle, some of the geopolitical uncertainty, where we are in the interest rate cycle in the US, all of these things that cause consternation from an economic cyclical standpoint. It's a different set of risk, an uncorrelated set of risk, if you will, in the defense sector. And unfortunately, I think if you look at the geopolitical instability and the tensions in the world, it's unlikely they cede in the near term. And whether or not they cede, the US is embarking on very long-lived, long planning cycle projects, such as hypersonics, where we have lost this primacy capability, and such as strategic missiles, where we have to replace a 6-decade-old technology in the current ICBM technology. So that's really what Guggenheim will lead for us. It won't be exclusive of US investor opportunities. I think here too, I would love to find a world-class mutual fund, international mutual fund in the US that we add to our registry. There's things such as that we will continue to dialogue and have interest, and that would likely be apart from Guggenheim. But I think in this more strategic realm, Guggenheim can be very helpful.
And Hank, just for investors, what milestones can we expect to see the company tick off over the next 6 months?
So as I foreshadowed to customers and investors late last year, calendar year 24, I think, is going to be markedly different than calendar year 23. Calendar year 23 was about making strategic change and quote, unquote, getting ready. There's a lot of really important work, but not a lot of it had a tangible manifestation. In calendar year 24, the milestones, the cadence will accelerate and they will be tangible in nature. So the Fairmont study, we've now provided price, demand, supply signals to the marketplace, to investors such as yourself. You can go build models. What we've now signed our first supply agreement. What I've communicated to the market is we're advancing discussions with an offtake and commercial supply agreement, both with commercial customers who I think are very, very strategic in nature, but also with research and development labs that I think are very critical in nature. And so I would expect those over the first half of this year. Obviously, progressing the fit out of our facility, beginning the installation of the atomizer, which the technicians arrive a week from Monday. So we're days away from starting the installation of the atomizer, commissioning the atomizer, starting our first powder production. These are all the type things that I think will be coming over the next 6 months, over the balance of this year. We will be a markedly different company as we sit here this time next year. And I think we'll regularly have those milestones as we progress through the year.
Well, thank you, Hank, for joining me today. I'm looking forward to catching up with you over the course of the next 12 months to check on Amaero's progress.
Thank you very much, Finola. Take care.